Broadcasting live from the Business Radio X studio, it's time for the GNFCC 400 Insider. Connect, build, and grow with the Greater North Fulton Chamber of Commerce.
Good morning to all of our guests. I see that most of you have made it in from the waiting room, so we're going to go ahead and start our panel today. I'm Callie Boatwright, the President and CEO of the Greater North Fulton Chamber, and I'm delighted that you chose to join us for this regular Thursday webinar. Just as a reminder on the instructions, everybody has been muted upon entry, so if you can please all keep your microphones on mute, then we'll avoid any background noise. If you have a question for our panelists, please use the Q&A feature, which you'll find at the bottom bar. We can address those questions at the end of the presentation when we see how much time we have available. We appreciate you using that technology for this. It is my pleasure to introduce our sponsor and our moderator today. I do want to thank our media sponsor, Business Radio X, and John Ray. The webinar recording will be available following the presentation, and of course, we will send a follow-up email with that link and any slides that are presented in our Chamber Link e-newsletter, as well as our website front page. I want to thank Ken Davis, who's with us today. Our forum sponsor today is Renaissance Bank. Renaissance has been a faithful partner of the Greater North Fulton Chamber, and of course, we appreciate very much their support of our programs and events. Ken Davis serves as the North Georgia Region Community and Business Banking President for Renaissance Bank. He has more than 30 years of experience in the finance and banking industry. And prior to joining Renaissance, Ken served as the executive banker at several other regional banks with responsibility to increase both commercial and consumer loan and deposit share in North Metro Atlanta. Ken is also a past chairman of the board of directors for our chamber, which we appreciate very much. Ken, thank you for your commitment to the chamber and the North Fulton community, and to me personally, I appreciate your support. We appreciate your sponsorship and you serving as moderator of this esteemed panel.
Thank you, Callie, and thank you for the opportunity to participate. And also for the dedication and your leadership and your staff's dedication during these challenging times. Due to the challenging and changes in the workplace, many businesses are planning for their new normal. And this morning before the call started, I heard there's now a term called the forward normal. Whatever it is, it's not going to be the same as in the past. Businesses are leaning upon the relationships with their bankers, insurance agents, accountants, attorneys, and other professionals. Each business is developing a recovery plan and concerned about cash flow, revenue projections, revenue generation, payroll costs, and many other issues. On today's webinar, we're going to focus on the financial part of your business and how you can be the best prepared moving forward. According to the Georgia Bankers Association, as of the middle of May, Georgia banks had made 131,000 loans under the Payroll Protection Program, totaling just over $14 billion. That ranks Georgia 7th in the number of loans nationwide and 11th in loan volume. The average loan size in Georgia is $107,000, while nationally, the average loan size is $117,000. According to the SBA data, as of May 19th, a total of $513 billion had been approved, leaving approximately $130 billion still available. And I know Renaissance Bank, as well as the other bankers on our panel today, are probably still taking PPP applications even up to today. The North Fulton City's economic development groups, along with the Greater North Fulton Chamber of Commerce and Select Fulton, recently conducted a business survey. Here are some of the interesting findings. 60% reported their businesses have remained open. 54% reported temporarily laying off employees, and 72% of the companies indicated lost customers as their largest factor hindering the restart of their business operations. The largest overall trend was the business's concern about how to market and operate in this quickly changing environment. And with that said, we're glad to have a panel of experienced executives join us today to help us meet these challenging times. On our panel today, we will be joined by Daniel Chung with Bank of America, Anna Brumby with the Small Business Development Center, and Andrew Bell with Affinity Bank. Our first panelist today is Daniel Chung with Bank of America. With over 2 decades of experience in commercial banking, Danielle is Senior Vice President and Market Executive for Metro Atlanta Business Banking at Bank of America, which focuses on delivering financial solutions to middle market companies. Danielle is accountable for business strategy, execution, sales performance, and revenue growth. Danielle, thank you for participating in today's forum. Our members are working with their financial institutions to work through these challenging times. Can you talk with our members about contingency plans, cash flow forecasting, and staffing forecasts? And what other financial reports should they be considering when discussing their future financial outlook with their bankers?
Thank you, Ken. Appreciate the introduction, and thank you again for sponsoring and moderating the panel, and thank you to the North Fulton Chamber for pulling this together. So you mentioned PPP, so I'll kind of start with that. Just to reinforce what you were saying, Bank of America has made approximately 19,000 loans in the state of Georgia to companies in the state for just under $1 billion in funding. And our average loans, so 98% of our loans were for companies with under 100 employees, 81% for companies with fewer than 10 employees, and 96% of our loans for under $350,000, 80% for amounts under 100,000, and 23 were for companies in low to moderate income neighborhoods. And yes, we continue to take applications, and we know how important the PPP is to the businesses. I'm not here to talk today about the forgiveness process because the SBA is still trying to pull all that data together, but I'm sure that will be top of mind. And, I'll probably talk about it a little bit as I speak this morning, but we hope to have more guidance in the next few days about the forgiveness process, which I'm sure is top of mind for everyone. So, as it relates to businesses and what they should be looking at, this is actually a timely conversation for us at Bank of America, because one of the things that we're doing right now is we are assessing our entire client credit portfolio across the bank. That's everywhere from our, small business clients all the way up to our, large corporate and investment banking clients. The reason being that we need to understand how our companies are faring during these unprecedented times. I mean, we've been through other recessions before where businesses have been impacted, but we've never really been in a situation like this where businesses are closed, businesses are facing challenges that they've never faced before. So we are doing that assessment, and I'm going to share some of the questions that we're asking our clients and some information that we're asking for, because I think it gets to your question about how do we need to engage our clients and during this time. One of the things I have to say is that communication, constant communication with your financial partner is extremely important. I mean, the banks, if you think about, you're one client to a bank may have hundreds of thousands clients. And we are worried about the financial health of our entire portfolio, which includes your business and many others. So the more you can communicate everything that's going on with your business to your bank, that's going to be extremely important because it makes them feel comfortable. Even if they're not hearing is all that positive news, at least they know that you are acknowledging the issues in your business and trying to deal with them. So I'll share a few of the things that we're speaking to our clients about. One of the first questions we ask is, were you in operation during the last recession and how did you manage? Because that goes to your ability to be strong leaders, to be resilient. And so that is something that we talk about. Don't worry if your business hasn't been through the last recession, because there's still ways for us to understand your ability to rise up and lead through these times. But that's something that we'll also look to. You mentioned staffing. Staffing is a tough one right now. Many businesses are laying off employees, they're furloughing employees. But then you also have the rules about PPP that say you have to keep a certain percentage of employees in order to get forgiveness. So there's a lot of push and pull there. But I think that some of the things that we're asking our clients about and that you should be thinking about are you using furloughs? Are you laying off employees? Are you doing pay cuts? What are you doing to owner distributions and salaries? That's really important during these times, because we want to know that the owners aren't taking excessive amounts of money out of the business and they're leaving it there to create stability and reserves on the balance sheet. Again, we talked about PPP. Keep meticulous records about your staffing, how many people you have on staff, who you retained, who you didn't, because that will be part of the information that you're going to have to provide at some point to whatever bank did your PPP for forgiveness. The other thing that we're hearing is, are you having trouble getting people back to work? Many employees in certain industries are nervous about coming back to the office, especially if it's a high-risk environment like a supermarket or a restaurant. We're also hearing that certain employees may be getting more money on unemployment than they would be getting employed. And so I know that the SBA just released some recent guidance that they can use some of the PPP money for bonuses or hazard bonuses that may be able to attract some of those folks back to the workforce. Use the job boards as a resource. I know the Greater North Fulton Chamber has a job board put up. Some of the other chambers do. That's a great place to sort of source talent if you're having trouble getting folks back. And the other thing to think about is, are you able to upgrade talent? There are a lot of people who are really skilled that are out of work right now. And you might be able to get some folks in that have a skill set a little bit higher than you would have been able to attract at, a similar price. The other things that we're talking to our clients about are demand. Are you experiencing reduced demand? How are you flexing your business to accommodate that? Are you doing staff reductions? Are you cutting expenses, distributions, salary changes? Are you pivoting to other products? We actually had one client who was in the personal kind of hair care products, and they're seeing a decrease just because, well, let's face it, we're all staying home. Nobody's doing their hair. But they were able to pivot into making hand sanitizer. So how are you thinking creatively about your business, and how can you bring back demand? We're also thinking about supply chain disruptions and contingency plans. Are materials costing more? How are you handling that? Can you pass those costs on to consumer, or does your business have to absorb them? Again, talk to your banks. What can they do to help? Have you accessed PPP? There's still money available. So those are still loans that you can access. And if you're not sure, reach out to your local banker and they will give you some guidance on how you put that application together. I know Bank of America is doing a lot of payment deferrals for our clients, whether it be on their term debt, changing some payments on card programs and things like that. So there are some push and pull that you can work with the banks on in trying to smooth out your cash flow. The most important thing, though, is liquidity. How many days or months of liquidity do you have on hand? What's your cash burn? Do you have access to capital from a parent company, an unused bank line, a guarantor, a sponsor, private equity? What can your guarantor or owners put in the business if needed? Are your clients paying timely? What demands do they have on their cash flow, and how's that impacting yours? And will you have liquidity needs in the next 30, 60, 90 days? And how do you expect to meet those? And this is where I have to put a plug in for our CPAs. A lot of this information, putting together, we're asking our clients for sometimes weekly profit and loss statements. So weekly income statements, weekly P&Ls, 13-week rolling cash flows, updated balance sheets. Please engage your partners, engage your CPA, and have them help you with this. It's not easy. If you've never put together a 13-week cash flow, there's so many factors to consider. All the things that we talk about: staffing, supply chain disruption, demand changes. Use your partners and just, again, be ready to be in constant communication. Your banks will work to see you through this if you are communicating and doing the right things in your business.
Thank you, Danielle. Some great insight there. And one of my takeaways was your very first comment, and that was communication. Bankers love to get communication, and not communicating is usually not a good sign from a banker's perspective. So even if you have bad news, over communicate and make sure your bankers are informed as to what's going on in your business. Thank you. Our next speaker
Couldn't agree more.
Anna Brumby with the Small Business Development Center. Anna has 15 years of experience as an influential business leader with a history of designing and executing successful marketing, branding, and business development strategies. As a consultant for the SBDC, her areas of expertise include building business growth strategies, designing marketing strategies, competitive intelligence analytics, product development, go-to-market sales strategies, and brand design. Anna, there are several SBA loan programs available. Can you please give us an overview of all the SBA, maybe not all the SBA programs, how about that? Overview of some of the SBA programs like the PPP, Paycheck Protection Program, the EIDL, the Economic Impact and Disaster Loan, and possibly the 7A loan program as well. And are there certain programs that work best for small, medium, and large-sized businesses, maybe retail businesses, restaurants, and hospitalities?
Well, thank you, Ken. I appreciate y'all having me today. I am sharing my screen. Again, we're going to talk about three programs today that, I'm sure everybody is somewhat familiar with. We're going to talk a little bit at a high level about each one of these programs. So I hope you all can see my screen. If you can't, somebody just give me a wave and let me know that. But really quickly, if you aren't familiar with SBDC, again, we have 17 offices across the state of Georgia. I am with SBDC at Georgia State. We cover all of Fulton and North Fulton. We have over 50 consultants across the state of Georgia. We've been around for 50 years. We are not part of the SBA. The SBA funds us, and we are responsive to them in terms of how we work with our businesses. But I think there's a lot of confusion around that. However, we do work very closely with them, especially right now with a lot of these programs and trying to get answers regarding the future of them. So with that, I'm going to jump in. So the three programs we're going to talk about today are the SBA 7A Guaranteed Loan Payment Relief Program, the Economic Injury Disaster Loan, or what we call the EIDL Advance, the EIDL Loan and the EIDL Advance. And then what you just heard Danielle talk about, which is the PPP program. I'll maybe briefly touch on that at the end, but I know that, we're the bankers here today are going to talk more about that. At first, we're going to talk a little bit about the 7A Guaranteed Loan Relief Program. And with that, if you currently have an SBA 7A loan and you're an existing borrower, not on deferment, then your 6 months of deferment will begin the next payment month due. If you're an existing borrower on deferment, then the 6 month deferment will begin after that deferment period ends. What I want to talk today about is the new borrowers, is this last bullet point. Again, there's a lot of technicalities to a 7A guaranteed loan. And as Danielle just, mentioned, you really need to be in constant communication with your financial institutions about these programs and are they right for you. But as a new borrower, if you are getting ready to start a business or you're looking to expand and invest in your business, the government programs like EIDL and PPP are not designed for this. So the 7A Guaranteed Loan Payment Relief Program is something that could be for you if this is your intent. It's great for a new borrower because, again, the terms are good. It's got a 6 month deferment as long as the loan closes before September 27th, 2020, because that is 6 months after this was passed in the CARES Act. This is really more kind of an SBA, what we call an SBA stand-in loan. So the SBA will be paying your principal and your interest and your associated fees with this program on your behalf during the deferment period. So if you are going to be starting a business or investing and growing your business, which ironically at the SBDC, we work with, businesses of all sizes, and we are actually seeing a lot of businesses that see an opportunity right now to expand their business because there are these type of loan programs. And again, it is something you need to talk to your banker about. Danielle also just mentioned talking to your team. So that's your CPA, tax attorney, all the members of your team, your CFO, making sure that these decisions are right for you, that you understand the terms of them. But the SBA 7A Guaranteed Loan Relief Program, again, and if you're looking to start a business or grow your business, really can be a great loan option for you. I do want to talk a little bit about EIDL. There are probably a lot of people on the call who have applied for EIDL. As most of you know, that program has run out of funding. However, they are still processing the applications that came in prior to the program running out of funds. So even if you have not heard yet, you still could be in the queue, and you can reach out to the SBA at their customer helpline or email them to find out where you are. The EIDL program, again, this was designed by the federal government to help businesses stay afloat during this time. You all saw with the SBA and with the federal government, they initially said they were going to loan up to $2 million. And then they quickly came back when they saw how many companies were actually applying, that they lowered that to $150,000. We are still seeing those loans come through. Like I mentioned, the loans are based solely on credit scores. Now, one of the things I want to talk to you about today is, we've seen a few things which we were kind of a little surprised about. We've seen some credit scores as high as 675 for those that apply for EIDL have been turned down based on that. If you are in that position, you can actually go back and you can ask to appeal that decision. It is going to be a long and lengthy process, but you can appeal if you're turned down for the EIDL loan. Again, this is, something where you'll have to go through the SBA and you'll have to wait to hear back from them. But just because you're turned down does not necessarily mean you can't appeal that decision. You can also turn down the EIDL loan. If you are approved for the loan, you can turn it down. What the government said initially is that you will have up to 6 months to be able to go back at any point and say, you know what, I've changed my mind. Actually, I do want that money that I was approved for, and you won't have to go through the process again. However, that being said, we don't know whether or not they'll be able to honor that because, again, the program has run out of money. As of this past Friday, we did hear back from the SBA that they do not have plans to refund the program as of today, but that could change depending on how things go with the coronavirus and companies getting back to work. However, again, the EIDL funds are a great opportunity for companies. Again, if it's only $150,000, you have 30 years to pay it back. You can pay it back faster. It's at a 3.75 interest rate. So do consider, whether or not this makes sense for you. Additionally, if you've applied for the PPP, you can get both. You just cannot use the funds for the exact same thing. I will tell you that with any loan document or any assistance program, obviously you need to read the fine print. We do get a lot of questions from our clients where they'll start to read the fine print and see some concerning language in there, and they're not sure if they should sign it. Again, as Danielle mentioned before, this is where you need to bring in your teams of attorneys. At the SBDC, we are not attorneys, so we cannot advise you on how to negotiate the contract if you are able to go back and do that. But again, before you sign anything, I would consider talking to an attorney or a CPA tax advisor. Additionally, with the EIDL, there was the advanced portion. A lot of companies would just see funds show up in their accounts. Initially, the government said it would fund it up to $10,000, completely forgivable. Then they came back and said it'll be based on the number of full-time employees. So if you have one full-time employee, you'll get $1,000. This is forgivable. We do know that for sure. But the EIDL loan itself is not forgivable. But the advance is forgivable. So if you are seeing funds just show up in your account and you've not yet heard about your loan application, that is the advance. We have actually heard from a few customers who have said that they have actually gotten approved for the EIDL loan, but have not received their advance yet and have had to call the SBA. So again, don't be afraid to reach out to the SBA to find out where you are in the application process. Another interesting thing that we saw with one of our clients is that they were wondering why their application was being held up. They were one of the first to apply. When they called the SBA, they found out the SBA could not check their credit because they had frozen their credit because of the Experian breach. So they had to then go and unfreeze their credit, call the SBA back. Then the SBA was able to process their loan pretty quickly and was able to move it forward. So if you have not heard and you did apply, I would encourage you to reach out to the SBA. All of these slides are going to be available to everybody. I'm not going through each and every point because I don't want to bore you. But again, a lot of this information has been out there, but I did want to give you some real life experiences of what we're seeing. Also with EIDL and the SBA, the SBDC, as I mentioned, we are not actually under the umbrella of the SBA in terms of we do not report to the SBA as our employer, even though they do fund us. However, we do have one point person that communicates with the SBA on a daily basis. So any questions we get from clients where they need clarifications about things, we will submit that to our point person, and they will then submit that to the SBA, and we will get a response. So if you are concerned about anything regarding your EIDL loan or questions regarding the contract, or if you want to return the funds or turn them down, or unsure why you're approved for a certain amount, please feel free to reach out to your SBDC, myself especially. My information is at the end of this, and we'll be happy to reach out to the SBA on your behalf. And then lastly, the third program we mentioned is PPP. And it's, again, as Danielle brilliantly said, they're still waiting on the federal government, which we typically are, to define the forgivability of this, right? They said it's 75%, as long as 75% of the funds you receive are used for payroll, then it is forgivable. Again, how all that's going to happen, how that's going to, work itself out, we're still waiting to hear about that. This is great. The PPP is such a great program because, one, there's still funding there. Two, the banks have done such a great job in processing these loans. They've actually gotten to small businesses faster than the EIDL loans, as well as the size of the loans are much larger that they're able to get. So for larger businesses, especially, even though, as Danielle mentioned, I think 80% of hers have fewer than, 10 employees. They are really looking out for those small businesses. So again, if you have not applied for a PPP program, I would, highly suggest calling your financial institution, your commercial banker, and reaching out to them to apply for this loan. It is a wonderful program. And again, it is getting money into the hands of customers faster. And so we will continue to see kind of how that plays out. But this program is not intended to be used to grow your business or inject new capital or capital gains within your business or improve cash flow. It's actually intended to utilize to maintain payroll, maintain mortgage lease, to keep you in business. So understand the difference between that and the 7A loan is going to be important as well, whether you're trying to maintain versus grow your business. And again, talk to your banker or reach out to the SBDC, and we're happy to kind of talk to you more about what may make sense for your industry, the size of your business as you move forward. And the last thing I really do want to say, and again, as Ken mentioned at the beginning, the forward normal that we're now experiencing that everybody's talking about, if I can impart any wisdom on this group, if you can remember one thing that I've said today is that you can never know enough people with access to capital. So take this opportunity today in this forward normal, not only to communicate with your existing banker, but utilize, great organizations like the Greater North Fulton Chamber to get to know other lenders in the organization, get to know VCs, get to know angel investors. If you've got a neighbor up the street that sold his business 10 years ago and sitting on a lot of cash, take him to coffee. One of the most important things, if you're looking to buy a business, start a business, even sell a business or grow your business in the future, you can never know enough people who have access to capital. So in this forward normal, make that a priority to grow your network in this area.
Thank you, Anna. It is important, a key part there. It never hurts to know a lot of people, particularly friendly investors, to help you out during this time. So thank you for that insight. Our final panelist is Andrew Bell with Affinity Bank. Andrew has a 17-plus year career in banking and has held jobs which include a regional retail branch management over 12 branches, district sales manager for merchant services covering the states of Georgia, Alabama, and Florida, and most recently serving as a commercial banker in the North Fulton, Forsyth County markets. Andrew, many of our business members have received funds under possibly those programs that Anna just described. Can you talk about the PPP forgiveness projections and calculations, and what are your thoughts on deferrals, loan payment deferrals?
Yeah, I'd love to share my thoughts, Ken, and thank you for what you do, and thank you for having me today, and to the Chamber for hosting this. This is an esteemed panel. I'm humbled to be a part of it. But both of these items, deferrals and the PPP forgiveness, it's obvious they've been on everyone's mind. These are weird times. So before we get into the details, and there's a lot of them, I'd like to offer a couple of general pieces of advice. And the first of which is, we've hit it on multiple times today, surrounding ourselves with good advisors, making sure that we're running all these ideas and business strategies around both of these items, deferrals and PPP forgiveness, by those professionals, CPAs, bankers, attorneys, wealth advisors. I think that's crucial. And second, in both of these things, we can't underestimate just using good, sound business logic when it applies to both of these. And we'll touch on both of those in a few minutes. I'd like to start with deferrals as the first thing to talk about. It's not nearly as detailed as the PPP forgiveness. We're seeing deferrals offered in a lot of different realms, including deferrals that we've offered at Affinity Bank. And those are ranging from home mortgages to business loans, credit cards, car payments, rents, leases, personal and business. And I want to make sure that people understand that a deferral does not wipe out a payment. It simply changes the structure or modifies that particular debt or obligation based on the institution. And so making sure that we understand that deferral completely is a crucial step. For example, if your car loan company offers you a 90-day referral on your car payment, that's a blessing. It can mean a couple things, though. It can mean that you don't owe a payment for 90 days, and they make a 5-year car note, a 5-year and 3-month car note, where those payments have simply just been added to the end. But it could also mean that you don't have a payment for 90 days, interest is still accruing, and a large portion or all of those unpaid car payments will be due when that 90-day deferral period is over. And that, if that money gets spent on other things, that could provide a really tough scenario for that borrower. And ultimately that could put you in bad standing with the bank. It could ding your credit. It could really be a negative thing. So understanding how that institution's deferral is structured, and I think that's just a really good thing. And even if we make payments, I would always personally encourage, even in a deferral period, making partial payments, or if you can make those payments during a deferral period, I would encourage that. And as we talked about earlier, Ken, consulting with someone that you trust is just a sound business decision, and do what's best for you, your family, as well as your business. Now the 800-pound gorilla in the room, which is the PPP forgiveness question. So the SBA PPP forgiveness published a 7-page document back on May 15th. We would love to think that the guidance of this application will be set in stone, but we're all preparing that another set of changes or regulations surrounding that application may come out before or possibly even during the forgiveness time frame. Right off the bat, as we talked about before, we need to make sure that we're staying in touch with our banker, our CPA, saving the SBA's website to our favorites on our browser, because that's going to be the best source of change in any guidance. So I want to start by touching on some basic rules. And for everybody on the call, I'd grab a pen and paper because there's a lot of details I'm about to throw at you, and please forgive how fast I'll go. So we're going to start with the basic 75%, 25% rule. And ultimately that means that 75% of the PPP funds have to be spent on payroll costs. There are eligible payroll costs. Before, we thought it had to be spent in 8 weeks. Now the guidance has changed where eligible payroll costs are included if paid or incurred during that 8-week period. So ultimately, that money can be spent outside of the 8-week period, but it has to be for things that have incurred within that 8 weeks. So let's just say we're paying for payroll inside 8 weeks, but the payroll cycle falls on week 9 or week 10. So that would still be covered. The same thing with the non-payroll eligible costs. So I know, Ken, you have a big question. What are eligible payroll costs? Well, I've got that answer for you. Gross wages, tips, vacation, FMLA, bonuses, commissions, severances, hiring new employees or increasing employees' wages are included. Also included, employers' portion of group healthcare benefits, as well as retirement benefits. State and local taxes on that compensation are also all eligible payroll costs. Now, something to note, you were limited to $100,000 salary on the front end, which means you are also capped on the eligible forgiveness per employee of $100,000 on the back end. So that equates to a little over $15,000 per employee maximum for that 8-week time frame. So non-payroll eligible costs that could be included, and that makes up the other 25%, not to exceed that. Utilities, electricity, gas, water, phone, internet, and there's a transportation is included in there. And everyone that I've talked to, it's interpreted that means that it's probably more meant for fuel costs. So if you're a business that owns a fleet, that would be included. Rent, interest. Now, something to make a note of, the way it reads is eligible non-payroll costs are payments of interest on any business mortgage, on real or personal property. Now, non-mortgage interest can be paid, but it's not going to be forgiven. And I think that needs to be noted. So that's a quick and high level overview of payroll costs and non-payroll costs covered in forgiveness. Now, I want to touch on the real big concern of people is what occurs when the forgiveness amount is reduced, meaning I got a loan and I'm not eligible. So I want to talk about some things that could disqualify some forgiveness. The first thing first, loan proceeds have to be spent. So if you got a $100,000 loan and you only spent 80% of that within the covered time frame, and you spend it the right way, you can't apply for forgiveness for the full $100,000. So you're only eligible for what you spend. And then the remaining portion of whatever wasn't used, there'll be a balance on the loan and a payment will be appropriated. Another thing that could get a loan not forgiven is a reduction in FTEs, a reduction in salary or hourly wages to employees. If your non-payroll costs exceed that 25%, that's something to note. As Anna mentioned earlier, the EIDL grant, based on how those funds were used, that could create some complications with what's forgiveness. Not double dipping. You can't use both loan proceeds on payroll costs. So that could disqualify. And then a big change that kind of happened in round 2 were what we're calling safe harbor rules. I want to touch on this briefly, Ken. This applies for loans exceeding $2 million. SBA has stated that they're assuming everyone under $2 million in a loan amount acted in good faith and needed the relief. Anyone over $2 million will now have to provide documentation of proof of economic uncertainty and will be audited. And if you're on the call and you're this company, I would begin working on providing very detailed documentation macro and micro levels, providing documentation sources of other liquidity. It's a lot going on there. And I think that goes for everybody. I think it's safe to never assume that we just don't need to create documentation. And so FTE reduction is one of those things. So you have to maintain the same number of employees. There are exceptions, and all that documentation is listed out there, exceptions on the SBA's website. Same thing with salary and wages reduction. It cannot be reduced by 25% or more. And then non-payroll exceeding 25%. And so final 2 points, and then I'll end my time. People are concerned, what does the unforgiven portion look like when I'm done? It is at a 1% interest rate, 2-year term, no payment for 6 months, but interest is accruing, and there is no prepayment penalty to pay that back. And so, once again, we want to make sure that we're encouraging business owners when they receive these money that they're using them for good business decisions, and it's worth taking a pause to make sure that the use of these funds aren't affecting the business long term. And then final recommendations. People, us at Affinity Bank, we're encouraging business owners to set up a separate account for those PPP funds, track your eligible spending on a weekly basis, really focusing on the payroll, non-payroll costs, and the forgiveness calculations, keeping detailed documentation for everybody and all your partners. And then finally, to kind of bring us home, Ken, just continue to confer with your trusted advisors and making sure that you're not walking off the ledge, in so to speak. So thank you.
Great insight, Andrew, and thank you for those points. I know, like you said, there's a lot of details to any of these government programs. And thank you to the panelists for participating. My takeaway was, out of everybody, it's all about communication, whether internally with your company and your owners or your employees, but also communication with your business partners. And you may need to be introduced to some new business partners as well as you go through this process. Consult with others, and don't think you have to figure it out on your own. That's what those professional advisors are there for. And then, as you said, Andrew, and Anna stressed as well, make sure you read the details. Not only a loan agreement you may engage in, but also know that a lot of these programs, and particularly on this forgiveness piece, that there's a lot of that the bankers and the other professionals just don't know yet, and we're waiting on guidance from the SBA. And as we saw during the PPP process, phase 1 and phase 2, we got clarity as we went through the process. And we used internally, our chairman used the example, we were building an airplane as we were flying at the same time. And that's probably what a little bit of the forgiveness piece is going to be about. But know that everybody wants to communicate just as quickly as we can. Stacy, I see that we have a couple of questions. Do you want to kind of take those over, and panelists will answer them?
Sure. Thanks, Ken. We do have a couple of questions in the question and answer function of Zoom. So if you have another question, be sure to add it in there for us. Danielle, you want to start us off? When do you expect more guidance and clarity on the new Treasury Main Street lending program?
Yeah, happy to answer that one, Stacy. So, we are still hearing that June is the date. Now, I know June is next week. So the banks have been given, a significant amount of guidance, but it's all still subject to change. I mean, what I can say is that they are still targeting next week or sometime in June, right? What I can share is just a few facts. And sorry, I'm looking to the side. I've got a couple things on my screen here. So this program is really for companies with under 15,000 employees. If you think about PPP, the cap on there was 500 employees. So this is really meant to capture the next tranche of client sizes. And, if you have a PPP loan, it does not exclude you from participating in Main Street. These loans are not forgivable loans. They're going to actually be term loans that are, meant to be paid back, but they are meant to be at a lower rate. We're estimating, we think it's going to be somewhere around LIBOR plus 3%, but there's still a lot of kind of information in the works on that. And then there's different types of loans, and there's different criteria for each in terms of eligibility covenants that you would have to follow. So I think, to Andrew, the points that Andrew and Ken and Anna all made, just communicate with your banker. Obviously, as soon as they have the information, they will share it with you. But more importantly, start reading the materials on the government websites and having conversations with your attorney and your CPA, because they are going to be the ones who will be able to guide you as to, your eligibility, confirming that you can comply with the program. And so hopefully in the next few weeks, we're going to be ready to launch this, and Bank of America will be participating as soon as we have the final go ahead on the program.
Thank you, Danielle. All of you on this call have mentioned that we've, of course, had round 1 and we've had round 2 of funding. Anna, can you speak to the possibility of there being a round 3 of funding?
Truth be told, obviously we're all hopeful. The SBA, we did have a conversation with them on Friday, this past Friday, May 22nd, where they said there are no plans to refund EIDL at this time. Obviously, there are still funds available with PPP. To say, depending on how things play out, they could refund EIDL, and that could potentially, be another option for people to go back for a second round and apply again. Unfortunately, we can't say definitively. Again, depending on the small businesses, how the economy starts to rebound, if they're feeling like they've exhausted all funds, it still is lagging, and people, small businesses are closing at a higher rate. They will look at it again, but today we can't really say definitively or not whether that will happen.
Thanks, Anna. Andrew, we'll let you catch the next question. Due to the PPP participation, are banks and financial institutions looking to hire employees to assist with the needs of the PPP programs and to help their clients through the process?
Yes, it's a good question, and it is definitely top of mind. Every bank and every financial institution is evaluating that because it's a bandwidth question. It is how fast can we create an automation for that, almost creating a funnel for the collection of document. And because of the unknowns, we don't know the abundance of information, and so there are some banks that I've heard that are outsourcing either a portion or all of the PPP forgiveness underwriting. Affinity Bank has already created that portal. We're kind of in the eye of the hurricane, so to speak, because we've got about 3 more weeks or so before round 1, applicant 1, kind of gets out of their 8-week period, and so we're thinking sometime middle to end of June is when the first eligible forgiveness. So we've got a little bit of time, and we're really, as those guidances change, we're just constantly fine tuning that process. But I know CPA firms have been a great resource for me, and a lot of them out there are providing some a la carte services or taking underwriting completely on. So there definitely is a need to partner in the community to just make sure that we keep hearing it. We're all in this together, and so there's a lot of people out there pitching in.
Thank you. To kind of wrap up the questions, I'd like to see if any of the panelists could offer, if you could do one thing, or if you could offer some advice on best practices for our member businesses, what would that be?
Sure. So Stacy, I guess I'll just reiterate a couple points that I made early on. I think that this has to be a constant partnership and communication with your key advisors. Think of it as, your company, you've got your CPA, your attorney, and you've got your banker. And really that group needs to be in close contact, and you need to make sure that you've got strong advisors around you that can guide you through this process. This is not going to be an easy environment the next few quarters. As we finish out PPP, work on the forgiveness, look at the Main Street program, businesses start to flex and potentially change their business models, deal with all these staffing issues. So what I would say is just stay in communication and really think more broadly about how you need to pivot your business. Pivot is a big word that we've been using at the bank lately. Everybody is pivoting. To Andrew's point before about staffing, we have pivoted a tremendous amount of our staff to PPP. We are pivoting how we look at new business. We are pivoting how we help our clients. And so think about how you have to pivot your business, whether that be, continuing to operate in the same model, but maybe making some tweaks or changing the model completely. I've seen some articles out there about this being a transformational occurrence, this pandemic, for our global economy, and how many, there'll be a lot of innovation, there'll be a lot of change. Some businesses will start doing things differently. So think about what you need to do for your business and your employee. Stay close to your advisors and think about your transformation.
Thank you. Andrew, any final comments for the group?
Danielle said it best. My prayer through this whole time has been that we seek, why is this happening? And I think that whether it be on the personal side of our home, reconnecting with, our family members and having Zoom birthday parties with people out of state just to be better friends and family members, to slowing down in this process, as Daniel said. And this is something that my partner Carter Barrett and I talk about all the time. Slowing down to speed up is using this time to rebrand or reevaluate or trim the fat or reinvent, and knowing that the people and businesses that hit the ground running are going to be the ones that sustain. And we don't want to be irrelevant. We want to stay relevant. And I think that we're seeing now more than ever the value of having just strong bonds with our friends and our family and our faith and our health, and in a professional sense, the vendors we work with, the efficiencies we use or don't use, the partners we have, our team, and not taking them for granted, and forging long-lasting relationships. So that's been my prayer all along, and I know that the individuals and businesses that are focused on that are going to come out and leave this in the rear view.
Thanks, Andrew. Ken, you got any final thoughts for our group today?
I think it's all been said very well by our panelists. Communication, good news, bad news, and I think it goes back to that relationship piece, as Andrew talked about, and we've got to have a long-term view to this. I mean, we started the year thinking in January we had a new flu virus, and then all of a sudden in February the stock market crashed. In March we're getting government aid, and we're just now beginning to come in some parts of the state to different phases of the governor's plan, and the city of Atlanta is coming into phase 2. So each market's got its own challenges, and it's going to be a long road till we get back to whatever this forward normal, new normal is. So I think it's important as individuals, as owners, as husbands, wives, grandparents, we take care of our own health as well, because we're going to have to be in this for the long haul. So.
Thanks, Ken. Anna, I appreciate you being here from the SBDC. Do you have any final thoughts?
Yeah, one thing that I do want to add, again, everybody said, given such great advice and information. One of the things we have always worked on with our clients that now is just so critical now is that financial planning piece, right? We've always told our clients to have projections, to have the right financial statements that they're managing on an ongoing basis, to have cash reserves. And again, I do think this is, a transformational time for us where people are going to do that and adhere to that advice more so in the future once we kind of get past this. And I do think that's going to make us stronger and better small business owners. So, again, we are seeing a lot of challenges within the small business, but those that actually have been doing that before, we're also seeing them. They're already pivoting. They're already growing. They're doing great. So we at the SBDC, and myself especially with a lot of my clients, see a lot of optimism in the future. And it is still a wonderful environment to be a small business owner. So we do want to encourage those that are thinking about in the future to continue to think about it and to continue to have the right advisors, have the right banking relationship, make sure you're planning adequately and appropriately. And then, once you're getting your business set up, again, to make sure those financial statements, those projections, those cash reserves are there to sustain you if something happens. And hopefully it'll never be anything this catastrophic again. But again, just making sure you're making sound business decisions. And then I'll just reiterate, you can never know enough people with access to capital. So if you can do anything starting today, tomorrow, start to grow that network, start to, reach out to people digitally, have, digital meetings, go to meet for coffee now that those are opening up. So I would say grow that network to really be prepared to, for anything like this in the future.
Thank you to all of our panelists. We appreciate it so much. Anna, I think your point's well taken. Right now, it is all about relationships. And I consider myself and GNFCC very lucky to have you all as part of our team. So thank you for that. We also appreciate your time. And we know how busy, especially, the bankers have just been insane over the last 2 months. And so we really appreciate you fitting us into your schedule and being with us today. Ken Davis, thank you for being our moderator. And thanks to Renaissance Bank for being our sponsor today. We appreciate you so very much. Just so everybody knows, our next Economic Recovery Webinar Forum will be next Thursday, June 4th. And we are going to have a big surprise. I don't know how many of you knew this, but Zoom is actually in Alpharetta. And so we have worked with them and have an executive with Zoom who's going to come on with us to talk about not just the regular connectivity, but kind of tips and tools from the folks who created Zoom. So that you can learn more about working remotely or coming back into your forward normal and how that will all look with some new tips and tricks like the pros. So you will be able to register for that on our website at gnfcc.com, and we'll be able to receive the Zoom call information for the call about Zoom. That's going to get confusing. Right now, we just are very appreciative that you took your time out to join us today, and we hope you have a great day, great rest of your week, and we'll see you next week. Thank you.